Hello again, everyone. In this technical analysis of the stock market video, I call it the lure of easy money, because I think that phrase kind of sums up exactly what's going on in the marketplace right now. We've had explosive price moves in the SPACs. We've had IPOs setting records, and I'll show you a quote or a tweet on that in a minute. We've been talking about the extreme put-to-call ratios. That is the background environment that we've been experiencing for the last really 9 months here in the market. And the quote I was talking about here is this tweet. It says, not Jim Cramer. I'm not really familiar with this person. I kind of came across it because John Husband retweeted it. And he's talking about the record number of IPOs and secondary offerings hitting record highs. And just an example of what is going on in terms of the extremes that we're experiencing. It's kind of hard to tell. You know, people are often saying, are we in a bubble? Is this a bubble? Well, maybe it's really hard to see a bubble when you're inside a bubble. And it's interesting that John shows this quote here from this book, The Go-Go Years, 1973 by John Brooks. 1973, The Go-Go Years. He's talking about the 1960s, and the book was about the 1960s. And you sit back and go, was the 60s the go-go years? I remember the 20s, the 90s. Oh yeah, the 60s were incredible. And what followed the peak in 1966 in the stock market? A bear market that went up and down and went nowhere for 16 years. And it's interesting the quote he has in here. It's interesting. One fact is glaringly clear in stock market history. It's that new issues craze is always the last stage of a dangerous boom. And he says, but investors, like other human beings, tragically repeat their mistakes. When the danger signs are plain, the lure of easy money blanks their memories and dissipates their calm. Pretty interesting quote, pretty interesting statistics that we've got here. So in this video, we're going to take a look at the Dow Industrials in a little bit more detailed look. And then I want to drill down and take a look at Tesla, because I saw a blurb or an article came out about Cathie Woods and a $3,000 projection on Tesla. So we're going to take a look at that. All right, so here's the weekly chart on the Qs. Actually, I meant to start with the SPX, but the Qs last week were down 2.32. So it's the fourth week in a row that we're below that 10-week moving average in here. And, you know, last week I said the Nasdaq was at a crossroads. I don't think we got a whole lot of clarity on that this last week. I think we're still kind of hanging there. You can really make the case that, you know, it could continue a sell-off in a third wave down, or it could have already turned and started to come back up at the end, towards the end of the week. So, you know, it's going to be really interesting to see how this coming week plays out. Now, if we take a look at the SPX on the weekly chart, look how this is continuing to trend to the upside. Now, we are getting bearish divergence in here. We're just not getting strong affirmation of the move with the indicators, but the price actually continues to trend up. Now, it was down 30 points for the week, just a little bit of a pause type week here on the SPX. So let's take a look at the Dow Industrials. Okay, the Dow was down 234 points on Friday. Friday, you know, we had a lot of noise and a lot of movement going on, a lot of volume, but you're always going to get that on triple witching, you know, day, triple witching Friday. I know we call it quadruple witching now because of, you know, options on futures, et cetera, or options on stocks, I guess it was. You know, so futures and options expired on Friday, and we'll see what happens with the continuation here this coming week. This is the picture for the week. Here's how the Dow looked. Potential little reversal candle, but we had a stronger one several weeks ago, and we really didn't get any follow through. Started to get a little bit of it, and it just turned around and stayed trending to the upside in here. And now, when I look at my Elliott Wave picture, now this is the weekly view. Let's go back to the daily view for a minute here. Okay, here's the daily view of the Dow Jones Industrial Average. I am looking for this third minute wave to complete itself within this 5-wave move on the C, and I'm talking about A, B, C of Y. And this is the picture we've got. And the Y, let me just zoom back out a little bit. Here's the count we've got coming off that March 2020 low. Okay, I think it's a big WXY. I think it counts best with that labeling. And so right now, within this last Y move, which is a last corrective pattern, I'm looking at a zigzag of an ABC, a 5, 3, 5. And here's what we're trying to finish out as 5 waves. So now when you drill down and say, okay, well, where are we within that? Here's what I think we're doing. We're trying to get 5 waves to finish off this third wave. I just don't think we're there yet. It's possible that the fourth wave had the low on Friday morning with the first hour of the day. Just not quite sure. When you drill down and take a look at the 10 and 15-minute bars, you can see that you can really make the case that it did, that there was a zigzag type pattern, and that this first move up, starting with the second hour of the day, created a little 5-wave move in here. So the real key is going to be, does that low on Friday hold or not? So the expectation is that I'm looking for this to come up in another little 5-wave sequence and finish off this third wave. Then we'll get more of a sideways type correction in here, and then one more push to the upside. So this is what I'm looking at. Now, this is just a path forward. It's not a projection that says wave 4 is going to be at this time, at this price level right now, until we get wave 3 finished, okay? So that is the pattern. This is what we're looking for on the Dow Industrials. Okay, so Tesla. So here's the news that came out today. Cathie Woods Ark has a new price target for Tesla, $3,000. Well, that's interesting. Let's take a look and see where Tesla is. Okay, I'm not going to argue that it won't get there, but I think it's got a lot more work to the downside to go before it finishes off this fourth cycle wave in here before we get on to a fifth cycle wave. And the reason why is because we've had 1, 2, we completed the third cycle wave up with the high on January 24th of this year, and now we're pulling back, and I think the pullback is going to come back, could possibly come right into this prior fourth wave of 1 lower degree, because I think we're on a cycle wave 4 here. Now, what I've done is I said, okay, well, time frame wise, how big was cycle wave 2? Well, here we go. This is how big it was. It went from August of 2018 to the low over here in June of 2019. So what, about 10 months or so? So if cycle wave 4 were to equal that, that would mean it would stretch out here to November. But if Fibonacci 61.8% would say by the end of July, we get a pullback. And so here's some time, you know, in terms of Fibonacci relationships. I would target, say, 61.8 to 100%, but I'm more worried and more focused about the price action in terms of the pullback. So right now, I would be expecting this to come back down into this level in here. And percentage-wise, what is that? Well, right here, when you look at 4 versus 3 in terms of a retracement, this level right here is only 23.6%, and this level right here is 38%. That's my normal target for a wave 4 is 38%. Don't know it's going to get that low, but even if you said slightly, you know, slightly beyond this 23.6%, that puts you right here at the end of the prior primary wave 4 in this triangle, that pattern that occurred before we had this nice explosive move to the upside. Let's take a look at the daily. Now here's the other thing that's interesting. This looks like a 5-wave move down to me. Well, if you have 5 waves down right here, then that tells me that this is most likely a zigzag, which means this is most likely doing this type of a pattern in a pullback. Then we come back down and complete it back down over into here. Okay, that's what I'd be looking for. So short term, we could get a little rally and bring it back up. We'll watch and see, you know, does it go the kind of leg? Does it make, if this is an A, B, C, will C be equal to A? That would be one of my targets. And then we'd have to look at the wave structure. But then the expectation would be that we're going to come back down for something a little more. And once we do all that, then maybe we're off and running for, I got to go back to my cursor. I keep doing that. Then maybe we'd be off and running for a big 5th cycle wave that takes us a whole lot higher and takes us above the 900 level, but you know, I think we got a lot more work to go to the downside before we head in that direction. Okay, that's the end of this video. Hope you found it helpful. If you did, give it a thumbs up. If you're not a subscriber, hit that little subscriber button. And if you'd like more of this kind of information on a regular basis, head over to joehenches.net, check out the website, check out the membership, and become a member. All right, everyone, we'll talk to you on the next video. I got to go watch my Fighting Illini continue their run in the NCAA, and they're on an 8-game winning streak. See if they can get to the Final Four and beyond. All right, we'll talk to you on the next video.